Hello guys, in this video we are going to see about Unit 7 Basic Accountancy Procedures. If anyone not yet subscribed our channel, kindly subscribe, bookmark. The objective of this unit is to study the accounting concept and then convention. Convention means the practice we are doing as now, and then accounting system, then framework of the accounting, then importance of uniform accounting practices, and then importance of keeping the record regularly. Introduction. They are different in terminology. What is mean different in terminology means, see, this is we will mention as 1 lakh, but this can be termed as 100,000. 1 lakh means 100,000. See, 1 lakh, 100,000. Both are representing the same thing. This 1 lakh only, but by using this different in terminology, some problem arises. Okay, if two person is using two different terminology but trying to represent the same thing, their problem arises to understand what exactly they are dealing with. See, a number or word and term may be used by different writers to express. Different writers may express different terminology to express the same idea or notation, but problem arises at the time of understanding. To avoid these problems, they finally came into a conclusion based on the past experience that there should be an uniform accounting procedures. Okay, this study created two broad heads. One is at recording stage, one more thing is reporting stage. Okay, these all things we will see in this chapter. Concepts of accounting procedure. Accounting is often called as language of business. The main purpose of language is you need to communicate. Okay, accounting will communicate the status of the business and financial position to the outside the world. So it should be commonly understandable by everyone. For that, there should be an accounting principles. This is definition for accounting principle. The body of doctrines commonly associated. What it means? The theory and procedure actually we are using accounting and then serving as an explanation of current practices. What we are doing is known as explanation. It giving some explanation and guide for the convention or alternate exits. If you are trying to adapt some other new things, means it will be act as a guide. In short, accounting principle is nothing but it provides some guidelines to make a sound accounting principle. It's just a guidelines. Okay, next we will see concept. First one is cost concept. Okay, every business transaction is recorded in book of account as cost concept only. Okay, what is cost concept? At actual cost you are purchasing. See, if you are going to purchase a machinery, okay, the amount you are paying to machinery and then to transport, and you have to give some amounts to the labor to fit in your plant or in your land. So overall expenses, the machinery cost plus transportation cost plus installation cost. This overall cost is known as cost. It's known as cost of the price. Okay, that price only we will note in our accounting book every year. We can't able to change based on the market value. That amount, that machinery amount is appreciated like that. We can't able to do. Okay, this is known as cost concept. Okay, the application of cost concept are all fixed assets are kept at cost of purchase only. We can't able to mention in book of account as market value. Very important point. Okay, you will mention cost price only, and then you will record the value in present value and not in any of the future value. Unrealized gains are ignored. Suppose if you are going to get an 1 lakh of profit next day or next month, next week, that will not be included in the book of account. Unrealized gains are ignored. And then any item that has no cost, so there is no value, then that thing is not included in the book of account. Okay, if any businesses owns land, building, machinery, property, rights, these are called as the resources. These resources monetary values are derived from the cost concept only. Okay, as we seen, these things are derived from the cost concept only. These assets are shown in financial statement as book value only. It is not indicated at present value of the machinery or market value of the machinery. Like that, it won't be mentioned. We will use only book value only. But there are some cases that market value and accounting value may be same. Some cases like cash. If you're mentioning in accounting book, you are having cash of 10,000 rupees. In accounting book also it will be 10,000 rupees only, and then in market value also the value will be 10,000 rupees only. So only in cash the accounting value or book value and market values are same. There may be a probability of asking this in exam for 0.5 mark. So cost concept does not mean all the asset will be maintained at original cost or cost price. There are some limitations. Okay, in machineries or some things, there will be a depreciation. So we are using over a period of time. There will be a normal wear and tear. For that we have to replace that spare parts and then we have to pay for the maintenance. Okay, for that we have to pay something. It will be reduced from our profit only. So that is known as depreciation. So in some cases we will take into an account of depreciation values also. We have to depreciate the values. The depreciation is not for the purpose of making equal to the market value of the asset. The main reason is to compensate the wear and tear. Okay, but so far we are having some limitations. The main argument of cost concept is that basic three criteria: relevant, objective and feasibility. These three criteria are satisfied by cost concept. So we are adapting this one, first one. Next one, money measurement concept. Okay, money measurement concept. Everything that we are going to record in our book of account are mentioned only if money involved. Okay, or anything if you are going to write, it will be converted into common form, which is known as money. For example, you are making some sales. Okay, you are making some sales, some thing means that one you will mention that 10,000 worth of product has been sold out. And then wages. Suppose a person worked in for 7 days or 10 days, you won't write you work for 7 days like that. You will write you are paying for wages of 10,000 rupees for 7 days you worked. For anything you are going to record, that you will convert it into a common form, which is known as money. And then quarterly production, how much production we have done, that we will mention in terms of money only. Applications. See, that company growth and company profit is mainly depend on health of the proprietor or manager. Based on their decision making only, that company is going to make a profit. But this is not recorded in the book of accounts. We are not recording in the accounts because in that proprietor or manager health, there is no transaction like money. So we are not going to make any record of this. And then there is no inflation or deflation in case of money measurement concept. Okay. In money measurement concept, everything is recorded in as money only, because money is not only exchange of medium, but it stores value. See, suppose if you're having in 5 buildings, 10 machines, 6 trucks, you can't able to write these things in your book of account, but you have to convert into a common denominator as money, and you have to write worth of 5 building, 10 machinery, and worth of 6 trucks, like that. Okay, the probably practical common denominator and yardstick is money only, but there are two limitations. As I said earlier, managing director of the company of decision making, his health is not considered in the book of account. And one more example is, suppose there is a strike between management and employee for 2 days. Probably there will not be any production, it is loss for company for 2 days, but this is not mentioned in the book of account because there is no transaction that money involved. Secondly, inflation or deflation. See, 1 rupee today is equal to 1 rupee 10 years back and 10 years after also, but in practice what you are going to purchase 1 rupee for today, you can't able to purchase after only after 10 years, because the purchasing power of the money will be reduced. This is not taken into the account of the money measurement concept. Next one, business entity concept. See, if a person is starting a business, means that person is a separate man, and that business is a separate man. See, suppose if a man is starting a business, he is natural person, is legal or artificial person. We have to consider that business is a legal person or artificial person. The concept separates entity of the proprietor from the business. So the business is a separate person. Suppose the capital contributed by owner is liable for the business, okay, because which is an artificial person. Suppose this natural person investing 50,000 as capital, then this business legal or artificial person is liable to pay this 50,000 back to the owner. Okay, it is liable to pay 50,000 back to the owner, because like he borrowed the money, like that you have to think it. Okay, the applications are, any money withdrawn by proprietor is treated as separate drawing. Suppose if a proprietor or owner is taking some cash from his business, we have to mention, we have to consider as the one transaction. Even though it is his own company, he can't able to withdraw as it is. They should make some accounting entries. And then profit is liability. See, if capital is liable to business person, then profit also liable only, because 50,000 he invested, you are making profit on this 50,000 only, then profit also you have to pay to the owner only who gave the capital. So profit is also known as liable. Okay, is liability, while loss is an asset. If profit is liability, means opposite of profit and opposite of liability is loss and asset. So if profit is liability, then loss is an asset. All the transaction that should be maintained in the viewpoint of business, not in the owner's point of view. There may be some questions that if I am the owner, if I am owning the company, then why I should maintain some transactions like this. See, if you are having a very small company, that accounting is not very important. You can take the cash whenever you required, and you can able to deposit the amount. If you're not going to maintain any transaction, it's not going to affect your business or your recordings. But in case of partnership, okay, and then limited liability company, like that, some big company, if you are making this kind of transaction, means it will be get confused. And then to make an uniform recordings, uniform accounting principle, that they said every company and every concern should follow the same practices, that artificial person is, I mean that business is an artificial person. So far we saw the three concepts. One is cost concept, at what price you are purchasing is mentioned in the book of account, and then money measurement concept, if only money is involved, that is taken into the account of accounting entries. And then business entity concept, that business is an separate artificial or legal person. Thank you for watching video. If anyone not yet subscribed our channel, kindly subscribe, bookmark.